Hi, everyone. I'm Gary Brode from Deep Knowledge Investing. We work with hedge funds, registered investment advisors, family offices, and individuals like you to help you get better returns in the stock market. I'm here with our host, Robb Fahrion. He's the CEO and founder of Flying V, our digital marketing partner. Robb, how was your week?
It was great, Gary. Yeah, ready for jump in the saddle here again. Exciting news, exciting topics that we were kind of discussing pre-show that I'm interested to get into. How was your weekend?
It was fine. I spent the weekend getting ready to discuss Taylor Swift today, so it was very exciting.
Not one you had on your dartboard, maybe.
Yeah, that was that.
I'm trying to think if Taylor Swift has made an appearance on this show prior, and I don't think she quite has. So I guess we were the one final show that hasn't been talking about her over the
Yeah,
last 12 months. It's a sad day.
she's been in my Twitter feed before. Um, just
Well,
barely beating out Beyonce as the cause of inflation.
yeah, exactly. This episode is called "The Taylor Swift is Responsible for Inflation Issue." I think that's great. We can't really pinpoint, or no one can agree on what to pinpoint inflation on, so we might as well throw it on Taylor Swift. I like that quite a bit. But other topics in today's show, we're talking about Bank of England and why that and what they may have done may be Taylor Swift's fault, or is it Taylor Swift's fault? GameStop makes an appearance, CBO debt projections, retail sales, um, up or down. We'll talk about that in terms of expectations. And then finally, looking at customer experience and the decline there and getting into that topic. Gary, we do have a guest on today's show that we're really happy to introduce. I'll turn that over to you real quick.
Yeah, so everyone, with Andrew Brown traveling in Scotland, we have a new intern who just joined us this week. Alex, he comes to us from Exeter in England, and he's one of the GameStop apes. He's been a big GameStop holder and supporter. And more significantly, he also comes to us from Peruvian Bull and his fantastic publication, The Dollar Endgame. You should follow him on Twitter or X, Peruvian Bull. He's somebody who I really like personally. I respect his view on economics. He's a great writer, and Alex came to us with the highest possible recommendation. And I'm happy to tell you guys, in just his first week, he was a huge contributor, contributing a bunch of this week's 5 things, doing a lot of the writing, putting together images, and here on camera to join us the first time. Alex, great first week for you. Welcome.
Well, thank you very much, and that's quite the introduction. But yeah, it's very good to be here, and thank you for the first week. It was a lot of fun. I got to write about the Bank of England, Taylor Swift, and GameStop, as you know.
All right.
The
So
trifecta right there.
yeah, so let's get ourselves started here. The first thing we're going to talk about, by the way, I'm going to read the title. This Alex came up with the title, which I thought was very funny. Bank of England's Dilemma: Swiftly Navigating Inflation and Rates. Alex, what in the world is the Bank of England going on there? What are they doing there?
Yeah, so of course, the big inflation wave that has kind of hit the world since COVID, we've in the UK, we like to think we've dealt with it. And in fact, just before the rate meeting on Thursday, our CPI got back down to 2%. But unfortunately, Taylor Swift, or fortunately, depends how you look at it, Taylor Swift has come over and she has scared the monetary authorities into holding rates high as they fear her concert and may send inflation a lot higher, like it had done in Edinburgh previously. And yeah, she's currently touring throughout Europe, through the UK. And we've seen online through Instagram, a lot of my friends are there at the Taylor Swift concerts, and Prince William and his children have made a guest appearance with a picture of Taylor Swift that's really rocked the world and rocked the world of monetary policy also, apparently.
All right. Well, we should definitely talk about the Bank of England, inflation, and rates. But before we do that, it's time to be honest. Alex, have you ever been to a Taylor Swift concert?
I can't say I have, no.
All right. Noted. So you're talking about Edinburgh. How much can this really matter, right? Is a Taylor Swift concert actually enough to move the economy? Is it a real number?
Well, in the concert in Edinburgh, I believe it was around 77 million pounds that was injected into the local economy when
How much is that in US fiat?
around, I'm looking at the figure here, $98 million. So it's quite significant. And the prediction for the UK and the kind of the south of the UK, England more specifically, was something around £1 billion, which is a lot more. A lot.
That is so that's actually a real number. Now, when I look at the chart from the Bank of England, where and Andrew will put it up, but when we look at their historical base rate, which is what they call the Fed funds rate, sorry, that's the English version, the British version of the Fed funds rate. Right now, it's a little over 5%, I think 5.25. But if we look back, it was at that level, around 2007, 2008, 99, 2000, 97, it was 7.5%. Back as recently as 1990, that rate was at 15%. So, everybody's looking forward to them lowering rates, but are rates really that high on a historical basis?
Well, no. I guess if you look at it like that, the rates are relatively low. But what is high are the debt levels in the UK. I think last year or earlier this year, we just crossed 100% debt to GDP, which is obviously a lot. So it depends how you look at it. But I think post Taylor Swift, those rates are going to come down. And I think, as you say, although looking at those rates previously, they do seem relatively low. I think a lot of people are accustomed to and maybe even suffer from some recency bias, and so that the perception of these rates is obviously different depending on how you look at them.
Okay. One of the things you wrote that I thought was really interesting, you wrote about how now that UK, their version of the CPI has hit the 2% level, that gives Prime Minister Sunak a pre-election boost, and saying that, conservatives who are hoping to be re-elected were disappointed that the Bank of England held. But if I remember right, the election there is coming up on July 4th. Interesting date for you guys to pick. But the point of this is, you were saying conservatives were excited for the Bank of England to lower rates, disappointed that they didn't. But these things work on a lag, right? I mean, they could lower rates tomorrow, and it's not going to affect the economy fast enough to affect the election.
True, and I think that's valid. I think it's more to do with the message that it kind of sends to the public that inflation's dealt with. We're getting back on the page of lowering rates, helping local businesses, and boosting the economy again. And since the Conservatives have been in, and all the Tories, that's what we would call them here, they've been in for many years now, a lot of people have kind of attributed all this inflation and all the economic problems to them. So I think coming from an angle of strong economic policy, cutting rates, and having lower inflation, it would have helped Sunak. So I think that was what he was hoping for. But I absolutely agree. I think in the short run, I'm not sure what exact benefits it would have that would influence the election.
All right, sounds good. And then last question for you on this one. With the election less than 2 weeks away, what's your prediction? Does Prime Minister Sunak have a shot at staying in office, or where do you think the House of Commons ends up in a couple of weeks?
I think it won't be that close, and I think Labour will win, and we will have a Labour government for the next few years.
All right. We'll bring you back in a couple of weeks to report on that. All right, let's move on. Let's talk about GameStop. Yeah. So DKI viewers know that I've had mixed thoughts on GameStop. I personally don't see the fundamentals to support the valuation. This is not a company I would want to own. That said, I have also been on record saying Roaring Kitty didn't break the law. I don't think he's done anything wrong. I don't think he's violated any SEC regulations. And he should be free to take whatever position he wants and disclose it. So, I've had mixed thoughts on it. Now, Alex, you've been much more enthusiastic. I believe you're a GameStop shareholder. Is that right?
That's correct.
All right.
Yes.
So moving on to the next thing here, GameStop meeting despised. What's going on there? What were the apes looking for, and why are they not happy?
So going into the meeting, there was a lot of anticipation with regards to what the GameStop board, or specifically Ryan Cohen, might do with the 4 billion in cash they had just raised from the run-up, whether attributed to Roaring Kitty, whatever you think. They did an at-the-money offering, raised $4 billion in cash. And going into the meeting, everyone was very hyped, and the meeting had actually been cancelled. So they had to redo the meeting on a later date. And everyone came out of the meeting very disappointed, because not only did they not state what they were going to do with the 4 billion in cash, there was also a proposal for a DEI where DEI statistics had to be taken from the board every single year. And a lot of the shareholders were very disappointed by this. Now, in hindsight, I think following Ryan Cohen's message, after him saying that it's important that the business goes forward strong and we're not hyping things up, I think everyone understood the 4 billion in cash that may come later, as they've just raised it. And Ryan Cohen mentions that, especially in the recent times, it's important to invest that money prudently and to make sure it beats the cost of capital. The actual proposal for DEI was recommended to be voted against by the GameStop board, as the DEI proposal 4, I believe it was actually brought to the board by, I believe it was a pension fund, actually, which was one of the holders of GameStop. And so they chose to vote against it, and the vote didn't go through. However, the other 3 proposals did go through.
So the vote wasn't even close. I'm looking here, about 144 million against, just under 16 million for. That's not even close. But one of the things I was wondering about, and I think you've just given us a great answer, given the history of efforts like this in the gaming business and how much gamers do not want these kinds of social issues injected into their hobby, I was a little surprised management taking this on. It seemed to be out of step with their shareholder, with their customer base. But you're making a really important point, which was that it wasn't GameStop management that was responsible for this. It was an outside pension fund that was advocating for changes at the company that the shareholders didn't want.
That's correct. That's absolutely correct. Yeah.
Okay. So to me, the thing that I think is a little bit disturbing is this company raised $4 billion, right? They went into the open market. They sold, it was 75 million shares. And I think they did that as well the last time Roaring Kitty was out, and his involvement caused the stock to go up a lot. They sold stock then as well. To me, there's something a little, I understand a company wanting to have a strong balance sheet, but $4 billion without any kind of disclosed plan, does that concern you at all? Because if I were a shareholder, and I'm not, that would bother me. Companies selling stock saying, we don't know what we're going to do with this.
Well, I think it's exciting. I don't think it concerns me, to be honest with you. And the reason it doesn't concern me is I have faith in the board, especially Ryan Cohen. The other 3 proposals that were put forward, one was to vote in the board directors again. The second one was to do with compensation. And the former CEO, Matt Furlong, was on a compensation of 16 million a year, and Ryan Cohen's is 0. So he owns, I believe, 36 million shares. So he is fully invested in the company and the company's success, and his reward comes completely from the success of the company. So I'm not worried about his intentions, and I have full faith in him. What I find exciting is that currently, if Ryan Cohen were to just put all that cash into short-term treasuries, that would I think it would almost quadruple their profitability margin just from the interest that they would, their year-on-year profitability just from the interest. So the prospect of that is pretty exciting, especially considering where GameStop came from and I think it's 800 stores that they've closed down. The last thing I'll say is the one interesting thing Ryan Cohen did say in his speech, and I am paraphrasing, so I may not get the words exactly correct, but he said that we kind of live in these crazy economic times with fiscal and monetary policy almost out of control, and any investment made must beat inflation. So there's a lot of speculation around maybe adopting a Bitcoin strategy, maybe like MicroStrategy. I don't know, but going forward, I am excited about what could be done with that 4 billion.
All right.
Gary, Gary, I had a quick follow-up. Alex,
yeah.
after reading through 5 things here on GameStop and the takeaway, talked about kind of some disappointment or unexpected topics that were discussed, right? Versus talking about the business strategy and what that looks like taking it forward. What were you, I think you kind of maybe hinted on it here, but what were some of the things you were looking for in terms of what their strategy would look like? Or what do forecasts look like in terms of the direction of the company and where they should be going or where they may be taking the business?
Well, to be honest with you, I'm not 100% sure. Yes, as I said, they may be divesting in maybe US Treasuries or maybe Bitcoin as just kind of an investment. But there's also the potential for changing the business model and maybe acquiring another company, which is, again, exciting. But I think that would also say a lot about what the board thinks of where GameStop is now in terms of the business and the fundamentals. So I'm not completely sure, but I think I would be more concerned if we didn't have this large pile of cash on hand.
All right. So, Alex, great job defending your point of view on this. Double credit for actually saying the words "I don't know." I always think that's amazing. Terrific that Ryan Cohen doesn't own a lot of the stock himself. You're right. He is interested in there. The only thing that, I might push back on is my view is closing hundreds of stores, selling millions of shares of stock, and then buying treasuries with it may not lead to the growth that shareholders are hoping for, and that would justify either the current business model or valuation. The good news is we're going to be discussing and debating this for months to come. So, look forward to more GameStop discussion, and, we're always open to different points of views on this. So, Alex, thank you. Great job on this.
Well, thank you very much for having me. And yes, you will be hearing GameStop for the foreseeable.
Not the last. Yeah, Alex, thanks so much. You did a great job. Yeah, I'm looking forward to working with you here in the future and pulling in more insights from you.
Perfect. Thank you, Rob. Thank you.
All right, Alex, we'll chat later today.
Thanks, Alex.
How impressive is that?
Yeah,
right? Like Andrew and Alex, these guys really do phenomenal work.
It's opening us up to a lot of potential great opportunities that Taylor Swift, GameStop might not necessarily always be on the dartboard for DKI. So bringing in that diversification of viewpoints is great.
I'll tell you what, it's easy to make fun of it, and to joke about the meme stocks and Taylor Swift. But the truth is, the economic work behind it is solid. The thinking behind it is solid.
Right.
And so, we may be discussing slightly more frivolous things, but it's still, it's still really good work.
Great stuff. All right, let's get into thing number 3 of this week's 5 things. Again, this is the Taylor Swift is responsible for inflation issue. Putting more on her plate. Seems like she can handle it just fine. But Gary, thing number 3, the CBO blowout projections.
Yeah, so the Congressional Budget Office revised their deficit projections. All right, Rob, little economics quiz for you here, government data. A government agency has revised its deficit and debt projections. Do you think they went up or down?
Their projections? Well, where I'm assuming they should go up, right? But knowing the government, did they revise down to only then go back and revise that to up? I'm not quite sure where we might be at.
Yeah, this whole thing is insane. So the CBO, again, that's the Congressional Budget Office. They had thought that the deficit this year, this fiscal year for the government would be about $1.5 trillion. They revised that to $1.9 trillion. That's about a 30% change. And we're, roughly halfway through the year. So, I mean, this is completely crazy. You can't believe any of these numbers. As a reminder, Congress has elected to fund excessive spending through inflation. Right? We used to do these things through taxation, which would cause people to have real conversations because they'd have to sit at their their dining room table and write out a check for what they owed the government. And that caused real conversations about the proper size and scope of government, whether programs were worthwhile, and people would vote based on that. And now we're in a situation where Congress has just said we don't need to do any of that. We don't need to have hard conversations. We're going to fund everything at every level all the time. If anyone disagrees with us, we're going to call them cold-hearted. And they're funding the entire government through inflation. We're all paying higher prices instead of paying taxes. But to give you a sense, like just looking out to 2030, which isn't that far away, half a decade away, slightly more, just in the 2022 projection was just over $35 trillion in debt held by the public, which is different from the on-balance sheet debt. And now that's gone to over $40 trillion. These are big changes, right? I mean, I remember when the government debt crossed $1 trillion for the first time. Now we've got an error of $5 trillion. Like, does this make sense to you?
Yeah, 0 cents. And Gary, we've talked about just overall confidence, right, at the Fed rate all the way down in terms of these reports, statistics, projections, right, and how they just seem to be over and over consistently off the mark. My question to that is, what would need to change, right? It almost just sounds like the system itself is broken, which I think a lot of people would agree on. From your take, I mean, what should change? What data and information should we be using? Will they ever revise to a place where, okay, they do have a grasp and an understanding? Powell even came back, I think it was last week or the previous week, saying that they lack confidence in these numbers. And here we are, right? These markets are moving off of these numbers, yet it seems to just all be quite the facade.
Well, first of all, let's give Chairman Powell, Chairman Jerome Powell, is the chairman of the Federal Reserve. Let's give him credit. I agree with him. I don't have confidence in the Fed's projections either. So, let's give him credit for telling the truth in public. And something, I know it sounds funny, but there are very few government officials who tell the truth in public in a way that is not positive for them or for their agency. Let's at least give him credit for being open about it, for being honest about it. I think, Rob, we have two issues. And I mean, I know what would fix it, but I don't expect either of these things to be done. So let's just take a look. The employment numbers are ridiculous. They get revised, so we'll have a month when the employment numbers will beat expectations by, 100,000 jobs. But if you look at the historical revisions, they revise those down by 125,000 jobs. So none of these numbers are real. Earlier this year, the Philadelphia Fed lost 800,000 jobs. The numbers are off by almost 1 million jobs. These are huge numbers. Again, Powell's saying they don't have confidence in their own projections. The CPI is designed to be inaccurate. None of these things are designed to give us real information that we can use to evaluate the economy. I think there are two problems. The first one is the government is simply too large. Right. And like, think about it, for all of us, like myself, I'm regularly critical of the government for bad data. But if someone said, okay, hey, genius, great, you're now in charge of the Bureau of Labor Statistics, fix it. Like, I don't know that I could. How do you, This is a huge country, 3,000 miles wide, 1,000 miles north to south, different cultures, different people, 330 million people. The largest economy in the world. And yes, it is still that, the economy isn't in great shape, but we are still the economic powerhouse of the world, despite, and listen, I get it. I'm on here every week complaining about the inefficiency of the government, the problems in the economy. But it's hard. It's hard when you cover so much ground to get all the data right. I don't know that somebody with good intentions could get it done. The other side of it is there's too much money tied up in having power, and that power gets tied to a media narrative. And, so they can basically feed most of the country, 99% of the country, they can feed fake data, tell everyone everything's fine, everything's great, and use that as a way to continue to grab power and grab money and siphon capital out of the system. And what's being done is horrible and dishonest. I don't know that it's any different from any other government or official corruption in any other country throughout history, right? I mean, this corruption is thousands of years old. This isn't
Yeah.
new.
My question follow up on that would be, do you think it's getting worse or has it gotten better, right? In your history and experience, is the gap widening to where we have even more of a lack of control and understanding of what's going on, or is it about the same?
I think it's widening here now. But I want to be clear about something. All empires end the same way. They all end with overexpansion, too much spending, debt, handouts, war, and then more excessive debt. The currency gets debased and the whole thing just collapses. And that's happened throughout history. And, Rome is a phenomenal example where, they originally had this very detailed system of laws that while, in 2024, we look at some of the flaws in it, and some of the moral failings, but there was a real attempt to have something resembling a virtuous society and laws that would be considered fair and evenly applied. Did they succeed perfectly? No, but they had a, pretty amazing society for hundreds of years. But then, it collapsed in overexpansion, war, debauchery, debt, give them bread and circuses, right? And that's, where we are as well. And these things happen. And so I think the corruption and the inaccuracy of government data, the lying, the faking, I think it is getting worse here, but I don't know that it's any different than any other time and place. And when you talk to people who do business in other countries, it's the same thing. I travel a lot, and I travel all over the world, multiple different continents every year. And you talk to people and they will tell you you can't get anything done unless you're bribing an official, a politician, somebody in charge. I don't think the US government has any monopoly on corruption. I just think it's just a fact of human existence, right? It's very hard for any society to stay virtuous for long periods of time. But I don't think the US government has any monopoly on corruption. I don't think they're really any worse than anybody else, but that doesn't make it okay. And I'm, certainly not in favor of it.
Sure. We'll keep eyes on obviously reporting, revisions, keep you in tune with everything going on in terms of these reports that are coming out and what to make of them. Gary, thing number 4, not shocking. We've talked about this over and over and over the last couple months. Retail sales are indicating the consumer is stretched. And I think you could probably say stretched thin.
Yeah, that's right, Rob. If we go back about a year ago, everybody, and I was among them, thought, wow, we're going to be heading for a recession. Now, I was on record as saying it's not going to happen this year, and I've been right about that. But last year, I was wrong about it. And one of the reasons is the consumer was just spending like crazy. So it turns out that, all of the stimmies that had been handed out in 2020 and 2021 bolstered people's bank accounts. They paid down debt. And then, the lockdowns, they crushed people's businesses. The other side of that was it was a lot of people staying home and not spending money. And so the country at one point, I don't know, a year or two ago, had its all-time high credit score. And so consumers feeling flush and feeling frustrated by a couple of years of lockdowns and not being able to spend got out there and, started to spend. And, then we started talking about increases in credit usage. We started talking about delinquencies, and that spending has started to slow. So in 2 of the past 4 months, consumer spending has been down. And then in May, retail sales were up 0.1%. That's a monthly number. But that annualizes to just 1.2%, and it was below the 0.2% estimate. Now, again, are the government numbers accurate? Who in the world knows on this? Trying to measure retail sales in a country the size of the United States to 1/10 of 1% is not possible. The reported number was 0.1. What was the real number? Was it 0? Was it 0.2, 0.3? I have no idea. I don't think one miss means that the economy is in terrible shape, but it's not a great sign in a consumer-led economy to see, that spending slow down. That said, it does make sense on an individual level. And if you're listening to this, I've also been on record saying it's a good idea to save, although don't save in dollars, but to save and invest and don't spend everything all the time. I understand why people are doing it and why they may be frustrated with the economy, but I'd advise against it. A little caution is a good thing.
We've talked about a bifurcated economy as well. You have this situation where wealthy asset gatherers, right, are probably doing well, right, or they're doing well enough at this point in time. On the opposite end of that spectrum, right, we see the families. Your run-of-the-mill middle class that are the ones struggling with gas prices, food, etc. At what point does kind of that masses versus the classes, right? The struggles with the masses start to really affect the classes at the same time. What does that look like? Is that coming in a recession? How does that kind of counterbalance one another? Because it seems like it's obviously so heavily weighted towards the wealthy end of the spectrum currently.
Rob, I think we're already there. One of the things that frustrates me is the programs that the government the programs that the government follows ostensibly to address their perceived problems with income inequality and to supposedly help the poor end up making things worse. So, we were just talking about the stimmies people got, and that was terrific. It got people out of debt. Okay, terrific. But here's what ended up happening. We had inflation. And so for wealthy people, they owned homes and they had advantageous mortgages where the money they owed was being debased. And, people owned stocks, which have gone up a lot. They own, investments in businesses, watches, cars, art, the kinds of the asset bubble that got blown up by all the money entering the economy was terrific for wealthy people. But here's what happened to poor people or less affluent people, right? They got, an $800 stimmy check, $1,600 check, and that was terrific. But if their expenses went up by $100 or $200 a month with inflation and everybody's grocery bills are up, again, I talk about this constantly, but don't tell me that food inflation is only 1%. I just don't believe it. So, Rob, think about it. If I give you a check for $1,600, you're like, hey, terrific, free money. I'm happy. But then if your monthly expenses go up by $100 or $200 every month, every year, right? This inflation compounds. That's not a good deal, right? And so the plans that the government engages in supposedly to address income inequality, to supposedly help poor people, ends up making things much, much worse for them. We're already there. These programs are harming the poor and the middle class. They are helping the wealthy. And the offensive thing about it is that the same people doing this are saying, well, we're trying to make sure the wealthy pay their fair share and that we're trying to help poor people, but their actual actions are the opposite of that. I think that's, I think that's the issue. The debate that's going on in the finance community is, do we believe the official numbers or not? And so, I get invited to do podcasts and webinars on a fairly regular basis. And sometimes on those, I get to talk with other people who I think, they're really great market strategists. They're good economists. These are really smart people who have a big following for a good reason. And I've had discussions and debates with them, and their view is the economy's in good shape because GDP is up or unemployment is down or, inflation has subsided from its highs. And they're telling me, no, the numbers are the numbers and we aggregated and the economy's in good shape. And I understand, like, technically that's what the formulas would tell you. My point on all of this is we have a small number of people doing extremely well and a very large number of people who are struggling with the current economy. And so I don't think that's an accurate way to view it. And if you have a situation where, you know, a small number of multi-billionaires are dragging up the averages, but a large number of people are struggling trying to pay their grocery bills, I don't think that's a sign of a healthy economy. And I think it's important to try to parse out the differences. And that's why I talk about a bifurcated economy where other people, again, these are people I respect, but they talk about really a unified economy. These are the general numbers.
Great point, Gary. And will be interesting to see. And I think you're right. It's just a system that, again, kind of that's becoming a theme too, right? It's just there's these things that are just absolutely broken, right?
Yeah.
That need complete reform. Now, what that looks like, that's the issue. So, thing number 5, Gary, moving to companies have pushed customer patience to new lows. Very interested in this. You mentioned the airlines. I'm sure you'll touch on that. Everyone can see it firsthand, but what do we have on that topic, Gary?
First of all, credit here. The study was done by Forrester, and the reporting on this was from the Wall Street Journal. Credit to both of those organizations. Forrester tracks customer. They have a U.S. customer experience index. And I'm going to be honest, I don't know, exactly how it's calculated, but just a couple of years ago, it was up around 72, and it has plummeted to an all-time low just above 69. And so basically what it's telling us is that customers are not happy with their interactions with the companies that they do business with. So the airlines are the obvious example, right? Like on one hand, everybody's feeling inflationary pressure. Companies have higher supply costs, higher fuel costs, higher labor costs. They're raising prices, cutting in-store assistance, reducing customer staffing, right? We get all of this. But the worst part about it is they're adding all kinds of unexpected fees. So again, I've talked about this a lot. I travel a lot, and I have the same frustration as everybody else, right? I go to buy a plane ticket, and it looks like, okay, hey, this ticket to, Thailand or Nicaragua or, Peru or wherever I'm going looks like a great deal, right? Okay, hey, this is a terrific price. And, we're all used to seeing, okay, we're going to add taxes on here. I'm used to that. But then you get a fuel surcharge. Okay, fine. And then an airport surcharge. All right, whatever. It's not that much money. But now, they're charging you to pick a seat. I don't mean to move up to first class. I mean, if you want to reserve a seat, they charge you for that. If you want to check a bag, they charge you for that. And I've had situations where I was buying a $300 plane ticket, but the baggage fees were $120. That's not a $300 plane ticket, right? I mean, these are meaningful numbers, but then it gets even worse. They'll charge you for a carry-on bag. So they're going to charge you to check a bag. They're going to charge you for a carry-on bag. Then they want to charge you to get on the plane early enough to put your carry-on bag in the overhead, right? It's just one thing after another, and now you get on, they're charging for drinks and meals, and, you can pay to get on the plane sooner. The whole thing has just gotten to the point where that $300 ticket, by the time you're done, might cost you $500, and that's not even close. Of course, people are upset. I don't like dealing with this. It wastes my time.
Yeah, I love the $79 Southwest fares that then all of a sudden balloon. Your next thing you know, you're $300 one way. I've learned to become a minimalist when I travel, right? The less is more in that situation. Gary, as a business, I mean, where would you position your business, right? Because I think what I've seen, I use actually one of a local sandwich shop I have, right? They've always from day one provided quality ingredients. I'd say they go above and beyond in terms of the actual what you get, right? Just in terms of the value, size of the sandwich, etc. Then on the flip side, you look at Subway, right? And their $5 footlongs, which now are $12, I think, per footlong. So that advertising campaign has had to be revised. But what I've noticed is prices have obviously increased at my local shop, but I feel actually okay still paying those increased prices because I still feel like I get the value, right? Versus at Subway, I'm paying the inflated prices, yet I'm still getting a crappy $5 footlong sandwich.
I think that's a great point. And, I haven't been in a Subway in years, but, I did used to go there on occasion. one of my great frustrations is the sandwich that I would get there never matched the photo up on the board, right? The photo on the board is piled high, tons, I like
Yeah.
it's tons of vegetables and, and the meat is so thick and like,
Advertisers can be shysters.
yeah, you guys are terrible. But like you go in and like they put, 3 slices of processed turkey and, some shredded iceberg lettuce and it never looks like the photo. So, I think that's an issue. I, you know, I really, Rob, I really have mixed feelings on this one. Um, on one hand, we do understand um why consumers are so frustrated. And more and more is being put on them. One of the other examples I've given is, if we go back to when I first started using computers, software companies they'd send out a physical disk and that was the whole program. So it was debugged, right? What you got was the final product because they weren't doing internet updates. Now, companies basically send out their beta versions. People buy them and the expectation is, don't worry, we'll make patches over time. And then, what ends up happening, I know for me, I've had situations where like an app wouldn't work on my cell phone or like my, my nav system and my cell phone wasn't connecting to my car. And so the question is it the carrier? Is it the device? Is it the app maker? Is it the operating system maker? Is it the, the entertainment system or navigation system in the car? Is it the Bluetooth problem? Like we're all now tech support for ourselves. And that is a huge hidden tax. All the effort that we have to put in to make things work. And every time they don't, like you have to do your own troubleshooting on this because everybody points at somebody else, right? T-Mobile will blame Samsung or Apple. They'll blame Google or Apple. They'll blame the app maker. Then they're going to blame, the JVC radio, or stereo maker. Like they're all pointing at each other. And for us to sort this out is a huge, huge hidden tax. But I also think it's worthwhile to put in a moment. And I know people aren't going to like this, but I do have a little bit of sympathy for some of the corporations, and hear me out before you guys start, getting angry at me. I know it's horrible to, have sympathy for a corporation who's annoying you. But think about it this way. Imagine like, in the consumer electronics business, you go into a store and you talk to somebody and that store, they're paying rent, they have stock, they have inventory, they have salespeople they have to pay, they have security, they've got people they've trained. And, you take an hour talking to a salesperson who talks you through the whole purchase, explains the difference between different models, who has good screens, who has reliable product, and they walk you through all of that. And then people walk out of the store and they go buy it on Amazon for $50 cheaper. Now, listen, you're entitled to do that. But there is something a little disingenuous about always going to the low cost provider. And so of course, people are upset about customer service. You're not paying for it, right? If you want good customer service, you have to be prepared to pay more than, when you do the research yourself and just click the buy button on Amazon or on a website. If you want to do that work yourself, that's totally fine. But, if you go into a physical store and you're not willing to pay a little bit more for the fact that they have to pay rent, they have to pay their people, they've got people trained, then how do you complain that you get bad service? And by the way, I'm guilty of this as well. I absolutely hate the customer experience of shopping at Costco. It's exhausting. You've got to bag everything. There's no bagging, right? Everything goes like you load your cart, then you unload it on the counter, and then you load it back in the cart, and then you load it into your car, and then you end up carrying everything like one at a time from the car into the house. It's a 3-hour ordeal. It is not fun. There's no customer service there. Well, guess what? Why do I go to Costco? Because it's cheaper, right? So I'm guilty of this as well, right? This is my fault as well. So it's not just Taylor Swift's fault. That part of it is on me. Sorry, everyone. But it's hard. Like if we want good customer service, we have to be willing to pay for it. And if we want the lower prices, that's fine too. But then we have to expect that we're not going to get good customer service. I think it's very hard for companies right now to find the right mix between high quality service, a good shopping experience, good sales support, good, when you have problems, mitigating it for you, but also doing this at a price point that customers will value. I don't envy companies trying to make those decisions right now. I think it's very hard at the moment.
Yeah, well said, Gary. And I think you're right. Kind of that domino effect, right, from the top down, affecting everybody. This concludes this week's 5 things. As always, thank you so much for the support and for watching wherever you may be on the globe. We appreciate you and making DKI into what it is today. What is DKI? We continue to push for new research ideas, but highly in-depth research and information on what's happening in the market to keep you in tune and help you navigate the market. As always, please head to our website, check out the information there, sign up for a free subscription to be alerted on new emails, content that we're publishing, as well as consideration to become a premium subscriber where you'll get access to Gary's portfolio, stock picks, all research and report, exclusive webinars, the whole 9 yards there. So Gary, any closing thoughts for today's episode?
I think just the last thing is a little appreciation for the young people that we've had around here. DKI has had some amazing interns. Andrew came to us from the University of Tennessee and in a short time has become a huge contributor, saving me hours a week. Alex, who you just saw today, in his first week did an enormous amount of this week's 5 things. Terrific prep, great attitude. Terrific to see him being a contributor in just his first week. But, I've also had the opportunity to be in touch with a lot of the former interns just in the last week. I've, been texting with Danny and Jordan. Tristan and I were texting earlier this week. Justin Guerra graduated and started his own business.
Nice.
And, I had a chance to get on the phone with him last week to catch up. These people they're smart. They're aggressive. They take correction well. Some of them are starting their own businesses. They're doing entrepreneurial things. They're all doing a phenomenal job in life. They deserve a huge amount of success. And, I want nothing but good things from them. It's great to see them succeeding. And I've been fortunate to have every one of them as part of Deep Knowledge Investing.
Great. And yeah, I can attest to that as well. Any of the interns you've had on, Gary, have been nothing but top-notch, huge supporters, and yeah, look forward to increased contributions from all of them as well. And that'll wrap up today's show. Gary, closing remarks?
No, we're all good. Everyone, thanks so much for tuning in. We'll look forward to speaking with you next week about whatever is going on in finance this week.
Thanks, everyone.
All right, so long.